You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Good morning. Today is Wednesday, December 19th, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Wednesday. The first thing to know today is the markets await Fed announcement and Powell. The Federal Reserve is almost certain to raise interest rates by a 1/4 point for a 4th time this year at the conclusion of today's policy meeting at 2 p.m. Eastern Time. That would put the Fed funds target rate in a range between 2.25% and 2.5%. Fed Chair Jeremy Powell will hold what will be a closely watched press conference 30 minutes after the release of the Fed statement. The U.S. Central Bank will also release new forecasts for economic growth and interest rates, known as the dot plot, as investors look for greater signs of the Fed's likely rate hike trajectory through 2019 and beyond. While policymakers have pointed to 3 increases in 2019, the market is starting to bet the U.S. Central Bank may halt its rate hikes altogether next year as risks to the U.S. economy mount. The second thing to note today is U.S. and China plan January talks. The U.S. and China held vice ministerial level talks to discuss the ongoing trade dispute as they move closer to the meeting in January. The two sides spoke by phone earlier today, according to China's Ministry of Commerce. Both are now focused on trying to document an agreement by a March 1st deadline for their current tariff truce to run out. That's according to Treasury Secretary Steven Mnuchin. U.S. President Donald Trump and Chinese President Xi Jinping agreed last month to hold off on additional tariffs on each other's goods for 90 days in order to allow for negotiations to continue. Washington and Beijing have been engaged in a trade dispute for the most part of the year, obviously. The third thing to note today is U.S. futures pointing to a higher open pre-open. The U.S. stock futures pointed to a higher open, with the Dow pointing to a triple-digit gain, as signs of progress in the U.S.-China trade dispute lifted sentiment, while traders eagerly awaited the Federal Reserve's latest monetary policy decision. The blue-chip Dow futures were up 188 points, or around 0.8%. The S&P 500 futures rose 20 points, or about 0.8%. The fourth thing to note today is the U.S. dollar and Treasury yields edge lower. Away from equities, the U.S. dollar Treasury index, which measures the greenback's strength against the basket of 6 major currencies, was down 0.3% at 96.27, hovering near a 1-week low. The greenback was weaker against the yen, with the USD Japanese yen losing 0.15% to trade at 112.35. It earlier reached the lowest level since October 29th at 112.60. The euro pushed higher, with the euro versus dollar rising 0.35% to 1.14, its best level since December 10th, and the pound was also higher, with the pound dollar advancing 0.15% to 1.266. That's amid an ongoing political deadlock over Britain's efforts to leave the European Union. In the bond market, U.S. Treasury yields inched lower, with benchmark 10-year notes slipping to 2.799%, their lowest level since May, before bouncing back to 2.817%. The yield on U.S. government bonds with 2-year maturities dipped to a 3-month low of 2.629%. It was last at 2.65%. It's a massive turnaround from November's 2.977% peak. Fifth thing to know today is oil attempts to find a footing after a bloodbath. In commodities, oil prices attempted to find their footing after suffering one of its biggest falls in years in the latest session. U.S. West Texas Intermediate crude futures were up 5 cents, or roughly 0.1%, at $46.65 a barrel. It tumbled 7.3% on Tuesday to settle at its lowest level since August of 2017. International Brent crude oil futures rose 18 cents, or 0.3%, to $56.45 a barrel. It dropped 5.6% a day earlier, at one point hitting a 14-month low. Adding to worries about oversupply, the American Petroleum Institute said on Tuesday that U.S. crude stocks rose unexpectedly last week, while gasoline inventories increased. Our second story today is from CNBC.com. Weekly mortgage applications fall 5.8% as the stock market plunge unnerves potential buyers. Even with mortgage rates at their lowest level in 3 months, home buyers are pulling away from the housing market. Mortgage application volume fell 5.8% last week from the previous week, according to the Mortgage Bankers Association's seasonally adjusted report. Volume was 17% lower than a year ago. Purchase volume drove the decline, falling 7% for the week, although it was 2% higher year over year. Buyers are still challenged by high prices and higher mortgage rates, and now some are clearly concerned about the steep drop in the stock market. Our final story today is from CNBC.com as well. Stock buybacks hit a record $1.1 trillion, and the year's not over. It's official. This is an all-time record year for corporate stock buybacks. Announced buybacks for 2018 are now at $1.1 trillion, and companies are using their authorizations currently. About $800 billion of stock has already been bought back, leaving about $300 billion yet to be purchased. We've seen buyback announcements recently from Lowe's, Pfizer, and Facebook, but in the last few days, as stocks have moved to new lows, companies are picking up the pace of activity. Several companies have announced new buyback programs, including Boeing, Johnson & Johnson, Universal Health Services, Shoe Carnival, and Playa Hotels. And several have announced accelerated buyback programs. And that, ladies and gentlemen, is news you can use for today, Wednesday, December 19th, 2018, your Options News Rundown. I'm Dan Passarelli, Trade Smart, and have a great day.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider. The
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.